Mortgage rates are making waves, and you might be wondering if now's the right time to make your move. Whether you're looking to buy a new home or refinance, declining mortgage rates could be your ticket to saving big. Let's dive into what this means and how you can benefit. 1. What are mortgage rates and why do they matter? Mortgage rates are the interest rates that lenders charge you when you borrow money to buy a home. These rates are typically expressed as a percentage of the loan amount, and they directly impact how much you'll pay over the life of the loan. A lower mortgage rate means you'll pay less in interest, which translates to lower monthly payments. The rate you receive depends on a variety of factors, including your credit score, the size of your down payment, and the type of loan you choose. Understanding mortgage rates is crucial for anyone looking to buy a home or refinance an existing mortgage, because even a small change in the rate can have a significant impact on your overall financial situation. Essentially, mortgage rates affect both your short-term budget and long-term financial health. 2. The big drop. Why are mortgage rates declining? Mortgage rates have been declining due to several economic factors, primarily driven by the actions of the Federal Reserve. When inflation slows down or the economy shows signs of weakness, the Fed may lower interest rates to encourage borrowing and spending. As a result, mortgage lenders often follow suit by reducing their rates to remain competitive. Another factor influencing the decline in rates is the overall demand for housing. If the housing market cools down, lenders may lower rates to entice more buyers and keep the market active. This decline is often seen as a response to broader economic conditions like lower inflation, slower job growth, or even financial instability, all of which make borrowing cheaper in an effort to stimulate economic recovery. 3. Refinance or buy a home. The power is in your hands. With mortgage rates falling, this is an excellent time for both new buyers and homeowners looking to refinance. If you've been on the fence about buying a home, lower rates mean you could secure a better deal, ultimately saving you money over the course of your mortgage. A lower rate means less interest paid, which can make a big difference in monthly payments, allowing you to buy more house for the same budget. For homeowners with an existing mortgage, refinancing could offer the chance to lock in a lower rate, reduce monthly payments, or even shorten the term of your loan. Whether you're buying or refinancing, declining mortgage rates put the power in your hands to make a smart financial decision. 4. How much can you really save? You might be wondering, how much can I really save with these lower mortgage rates? Let's break it down. Even a small difference in interest rates can add up to significant savings over time. For example, if you're borrowing $250,000 and your interest rate drops from 5% to 3.5%, your monthly payment could decrease by hundreds of dollars. Over the life of a 30-year loan, that could mean saving tens of thousands of dollars in interest payments. Refinancing to a lower rate can also help you pay off your mortgage faster if you choose a shorter term, such as 15 years, all while paying less interest. This makes now an ideal time for many to take advantage of these rate reductions and potentially save money both monthly and long term. 5. The catch. Is there a downside? While lower mortgage rates sound like a dream, it's important to be aware of the potential downsides. First, securing a lower rate typically requires a solid credit score, so if your credit isn't in the best shape, you might not get the most favorable rates. If you're refinancing, keep in mind there may be closing costs, which can add up to a few $1,000s depending on the size of your loan. Another factor to consider is your long-term financial stability. Are you planning to stay in the home for the next 10, 15, or 30 years? If you're thinking of selling within a few years, refinancing may not make as much sense. The process can take time and energy, and you might not recoup your costs if you don't stick around long enough. 6. What if you're not ready to buy? Not everyone is ready to jump into homeownership, and that's perfectly fine. But even if you're not buying, the declining mortgage rates could have an impact on the rental market. With more people taking advantage of low rates and buying homes, there may be fewer renters in certain markets, potentially driving rental prices down. Additionally, if you plan to buy in the future, paying attention to mortgage rate trends will help you plan your next move. If you're renting now, consider whether it might make sense to stay put a little longer or look into buying while rates are still low. Either way, being aware of the market changes gives you an advantage in planning your next financial steps. 7. Is this the new normal? The big question on everyone's mind: are these declining mortgage rates here to stay? While rates are low now, they're not guaranteed to stay this way forever. Mortgage rates are influenced by a complex mix of economic factors, including inflation, job growth, and the Federal Reserve's monetary policy. Rates might continue to dip if the economy faces challenges or inflation slows down. But they could also rise if the economy picks up speed, or the Fed decides to increase rates to combat inflation. In short, we can't predict the future, but we can say that periods of lower mortgage rates tend to be cyclical. If you're thinking about buying or refinancing, now might be the best time, but it's always a good idea to stay informed about potential rate changes in the coming months. 8. How to lock in the best rate insider tips. If you're ready to take advantage of these declining mortgage rates, here are a few tips to help you lock in the best deal. First, shop around. Different lenders may offer slightly different rates, so it's crucial to compare offers. Use online tools or consult a mortgage broker to get a sense of your options. Next, consider getting pre-approved for a mortgage to lock in a rate before they change. Many lenders will let you lock your rate for 30 to 60 days, giving you time to shop for homes without worrying about sudden rate hikes. Finally, keep your credit score in top shape. A higher score can help you qualify for lower rates, so check your score and take steps to improve it before applying. With the right strategy, you can secure the best possible mortgage rate and save thousands over the life of your loan. 9. Predictions. What's next for mortgage rates? So, what does the future hold for mortgage rates? While predicting the exact direction of mortgage rates is always tricky, experts suggest that rates may remain relatively low in the near term. Factors such as ongoing inflation control efforts, changes in the job market, and the Federal Reserve's actions all play a role in rate movement. If inflation continues to cool and economic growth slows, mortgage rates could stay low or even dip further. However, if the economy heats up again, there could be upward pressure on rates. It's also possible that rates will fluctuate in the short term as the market adjusts to economic shifts. The key takeaway? Mortgage rates are likely to remain unpredictable, but staying informed and acting quickly when you spot a good rate will give you the best chance at locking in a favorable deal. 10. Conclusion. Is now the time to make a move? Now that you've got the inside scoop on declining mortgage rates, the question is, what should you do next? If you've been on the fence about buying a home or refinancing, these lower rates create a prime opportunity. Lower rates mean more affordable monthly payments, lower overall interest paid over time, and more buying power. Whether you're buying your first home or refinancing your current mortgage, now is a great time to take action. But remember, do your research, shop around, and get pre-approved to lock in the best possible rate. The market may shift, and rates may rise again, so acting while rates are still low can help you make a smart, financially sound decision. Stay informed, take control, and make your move when the timing is right. That wraps up today's dive into declining mortgage rates. If you found this info helpful, don't forget to like, comment, and subscribe for more finance tips. Have questions or thoughts? Drop them in the comments. We'd love to hear from you. Thanks for watching, and see you next time.